Welcome to my channel. In today's video I'm going to show you how to mark the support and the resistance on a 15 minutes time frame. Okay, depending on what time frame you are trading, you can mark the same support and resistance. It will just give you ideas where are active buyers or where the price reacted when it was going down, that means there is a support, and where the price reacted when it was going up. So I've actually marked here, I'm showing you from 3rd of July. You can say it started in the night right here, and it came back, bounced back and came all the way down because the previous day high was here and the low was here. Okay, so what you need to do is go and mark the yesterday's high and then you mark the yesterday's low. So I'm showing you how to mark on the 3rd of July. You take a horizontal line on your chart and you mark right there as red. You can say it as a support, and then you mark these as a support, and this is a resistance. The high is a resistance, low is a support. So inside that support and resistance, which we call the major resistance and the major support, you can graft another line and mark from here, or from here the minor support and the minor resistance. You see, this was the major, this you can mark as minor. Minor means these are small moves when it goes sideways. So when the market opened on 4th of July, this basically jumped in and jumped out. It didn't even reach here to the minor. It created inside a minor support and minor resistance. You see here, every time the price went here, it pumped, came down, went back, came down. So on the 7th of July, the market opened here, went up, same to the resistance, and crashed back. You see, there was a support here, and it came to the support, and it was fighting here for at least 3 hours. You see here, because there is a support, there is active buyers here. They will come into action because when they bought here at this price, they were heavily rewarded and they sold it here. So they exactly know when the price comes here, they will sell, because the sellers who sold here got heavily rewarded. So there is a chain reaction, because these people who have sold here need to buy here, and these buyers, whoever are buyers who just like to buy only, they buy the supports, they come into action and the price moves up. It is not all the time that the price will move up back, but it moves to at least 25%, at least 8 of the times by 10. If you do this to 10 times, 8 times it will move to 25 times. Okay, so from there it collapsed. So this became as a resistance for the next day, and your low was here. This became the support. So you mark it on the next day, your resistance, major resistance, and the major support. So the next day the market opened, it went, it didn't literally go to the support, but it exactly came where it crashed from. Okay, so this is where day before yesterday it crashed from, right? So it went there, came back to the support, you see, came back to the support and went back. Now it created a minor resistance, and here was the minor resistance and here was the minor support. So now it is bouncing into minor resistance and minor support. So the major support, major resistance was here and the major support was here. Okay, that's how the major support and the major resistance is marked on what was the high of yesterday's bar or yesterday's whole day, and what was the low of the yesterday's whole day. Okay, though you mark that and you start the day. Inside that high and low, you can be formed depending if the market is on sideways, or depending if the market is trending downward or is trending upward. is it going to break the resistance or is it going to break the support. But when it comes in Forex, it's a very liquid market. It takes a lot of effort to break the resistance and support. So they can go all day into the minor support and minor resistance. You go hit here minor resistance and you hit here minor support. It's like a bouncing castle. You go up and go down. Okay, these are small moves, but they are at least 20 cents move. When they have the major moves, whatever instrument you are playing, you should know what exactly how much they move, because euro on a given day it moves 50 cents, and then it can crash at least to a euro, because the move started from here to here was a 50-cent move, and then exactly it bounced back to the support because it's a 50 cent it can move. That's why even if you trade stocks or if you trade any Forex pair, you should know how much it moves on a day. Then you get the idea how much, what support and resistance. That's how the support and resistance are formed. The minor support and the major minor resistance is nothing but their moves, how much they move. I know how much the euro moves and how much is the major and the major move and how much is the minor move. And inside the minor move there is a minor move also, that is of 10 cents. The minor move in euro is 20 cents. The major move is 50 cents to 1 euro. So these are very important things to know when you trade any of these ones. Okay, this was basically about support and resistance. Hope you liked the video. This was just for educational purposes, and thank you for your time. God bless.